All right, let's dive into the DexFi health report for January 30th. On the surface, we're seeing a pullback in price, but what's happening underneath is a completely different and, frankly, a much more exciting story. Let's get right into it.
But first, you know the drill. A quick reminder that this is for educational purposes only. It is definitely not financial advice. Please always do your own research.
Okay, let's just rip the Band-Aid off. After that really strong recovery rally that pushed the fund up to 1.75 million, we have seen a pullback. As of today, the fund is sitting at about $1.61 million, which is down about $139,000 from that peak just a couple of days ago.
Now, when you see a number like that, it's easy to get focused on it. But we have to ask the critical question. Does that number, does the price, really tell us everything that's going on inside the protocol, especially when the whole market is taking a hit?
I want you to forget the price for just a second, because this right here is the real story. Today was the second highest volume day in the protocol's entire history, over $18 million. And look at this, 3 of the top 5 all-time volume days happened this week. That isn't just market noise, folks. That is the sound of an engine running at full throttle. So that brings us to our first major point. We need to understand why the pullback happened, and more importantly, what it shows us about the fund's new and improved resilience.
So what drove the pullback? Pretty simple, actually. ETH. The price of ETH dropped almost 10% since January 28th. The market went down and, yeah, we went with it. But here's the key thing. The fund only dropped 8%. We actually held up better than the wider market. And this brings us to a super important metric, sensitivity. Right now, we're seeing a sensitivity of just 0.8x to ETH's price swings. Now, to give you some context, during the last big correction, our sensitivity was 1.4x. That means we were actually more volatile than ETH. Now we're moving less than the market. That is a huge sign of growing stability and resilience.
And this newfound resilience is happening at the exact same time that we're seeing an absolute explosion in activity. So let's take a closer look at these historic volume numbers, because this is where you can really see the health of the protocol.
I mean, come on. This chart just says it all, doesn't it? We hit the all-time record on Wednesday, then the third highest day ever yesterday, and followed that up with the second highest day ever today. We're talking about back-to-back-to-back blockbuster days that have completely rewritten the history books in just 72 hours. It's incredible.
So why do we keep harping on volume? Why does it matter so much? Well, it's pretty simple. For a real yield protocol, volume is the fuel. It's the raw material that the engine converts into actual, tangible profit.
And leading the charge, no surprise here, is the BNKR token. It's just on an absolute tear. Today, it accounted for $7.3 million. That's a staggering 40% of all volume. And this just shows you we have a vibrant, active ecosystem here.
And here's where the rubber meets the road. All that activity, that 18.4 million in volume, isn't just for show. The protocol's yield engine took all that trading and generated almost $6,500 in profit. Today, alone, price can go up and down, but this is real yield being generated every single day.
We're also seeing a lot of strong activity in bonding. Over 250 new bonds were minted in just the last 2 days. And it makes perfect sense, right? When the fund's value pulls back a bit, the bond price gets cheaper, which creates a really nice opportunity for investors. Right now, you can get almost 10% more bonds for your dollar than you could just 2 days ago.
Okay, with all this daily action, it is so important to zoom out and get some perspective. So let's put this week's wild ride in the context of the last 52 days.
And man, what a journey it's been. This timeline really shows the roller coaster we've been on. We had that initial quiet period, then an epic 26% rally. That was immediately followed by a deep 24% correction. From there, we had a powerful 16% recovery, which of course leads us to our current pullback. It has been a true test. And yet, after all of that chaos, after all of those massive ups and downs, where do we stand? Well, the fund is essentially flat. It's down less than 1% from where it started 52 days ago. But it's not the same fund, not at all. It now has a proven, battle-tested yield engine that has shown it can perform under the most extreme stress.
So what's our final verdict for January 30th? We're giving it a yellow-green status. This means that, yeah, there's a pullback in price that warrants some caution, but it's happening alongside some extraordinary and incredibly positive underlying activity.
So let's break it down. The yellow part? That's the price pullback, driven by the drop in ETH. We have to acknowledge that. But the green? Oh, the green is just overwhelming. Volume is absolutely explosive, second highest ever. The fund held up better than ETH, showing that improved resilience, and that yield engine is just humming along, cranking out over $6,000 a day in pure profit.
So look, the fund pulled back from the recovery rally. That's the reality. ETH dropped 9.7%, and we followed with an 8% decline. But here's what really matters. The yield engine is thriving. Today's 18.4 million in volume is the second highest day in protocol history. Yesterday was the third highest. Wednesday was the record. 3 of the top 5 volume days ever, all in the same week. BNKR alone did 7.3 million today. The protocol doesn't just survive volatility, it generates from it. Every trade, every swap, every single bit of that $18 million generates fees. This is what real yield looks like in action. And that's our report for today. Thanks for joining this explainer. And as always, remember that digital assets are highly volatile. Never invest more than you can afford to lose, and please, always do your own research.